I hope you like the music. Like we did, we started the morning with a little dance. So we have a really packed agenda for us today. Hope you already had your coffee or brought it with you because there's a lot of information to cram into the brain. I think COVID-19 influenced a lot of things, mainly in creating a big boost into digitalization processes to the online world. And one of these major influences we've seen is the stock market and the amount of IPOs that were made. Here in the community, we had already big ones like Electrion, Saver One, Innoviz, Axilion, Blitz Motors, and many more that happen. And we'll hear from some of these today. And we're also expecting many soon to come, also like City Transformer, Arbe, Chakratech, Re. And I think these were the only ones that were announced, but we're expecting a lot more to come. Before we start, I would like to welcome Dr. Anat Boinstein, the Director and Chairwoman of the Smart Mobility Initiative under the Prime Minister's Office, to say a few welcoming words.
Good morning, everyone. Good morning, EcoMotion community. And thank you very much, Orly. And thank you for all the speakers that are taking part of this important webinar today. So most of you probably heard that I will be soon concluding my position as Chairwoman and Director of the Smart Mobility Initiative that I am proud to say that I had the honor of being there from day number one. About 9 years ago, we were sitting, a couple of colleagues of mine and friends in my office, and thinking, how do we create a community? We had something in mind like Burning Man even. But not only that, but how do we persuade the government to support something like that and to make them realize the importance of such a thing and what huge impact it could have? It was certainly something difficult to do, but it was worth every minute of it. Through the years, I saw the community expand, grow, evolve. And always from the beginning, we saw our role as actually providing value to the community. So we put ourselves the objective to identify the needs of the community and try to answer those needs. We aimed at creating opportunities by having investors events or delegation or international events. We try to open up opportunities within local authorities, in cities, not just in Israel, but across the world, and always provide relevant content, dedicated webinars on mobility, electric mobility, on drones, on the mapping, and much more that we did. We always try to be with our ears out there and listen to what the community needs and try to answer, try to be there for the community members. And this was done through a dedicated steering committee that I'm proud to have been the head of. And this is the place to thank them, to Daniela from my team, to Moran from the Ministry of Economy, to Jonathan from the Innovation Institute, and of course, to the one and only Oli, which was actually the person behind all of this. So they were always committed to this, to actually making the community, bringing value to the community. About 2 months ago, we had a meeting with the director of the ISC, Anat Goeta, and her team, wonderful team. And they laid before us the opportunities, the mechanisms that could be for startups. And we immediately thought, we have to communicate this to all these success stories. And again, congratulations to all those IPOs that you will be hearing about from the startups later on. And that's what today is all about. So again, congratulations to all of those. And we do want to see, we know we will see more IPOs. And just before I step, not down, I'll step aside. So one last time that I'm opening an EcoMotion event, it's very important to me to say that the government of Israel sees this, has seen this sector as very important and will continue to strongly support this because it's very important for the government, and they will continue to have mechanisms, supporting mechanisms, supportive regulation, and there will be a team in the Prime Minister's office, but there's also a big interministerial team in all the ministries that are dedicated to this. And of course, you have the EcoMotion, the EcoMotion group. they're still there. They will be there, and this is the place for the community to thrive and grow. And so I do hope to hear more IPOs. There's no reason not to. You guys are great, you're magnificent, and will continue and do your best. Thank you.
Thank you, Anat. You're great and magnificent yourself, and we wish you well. And thank you for making sure that EcoMotion continues before the end of your candidacy. And we wait to see what comes next. So if this is your first time joining us, let me tell you about EcoMotion real quick. We are a joint venture of a private NGO called the Israel Innovation Institute, together with the Israeli government, the Smart Mobility Initiative, and under the Prime Minister's Office and the Ministry of Economy. We were founded in 2012 with the vision of positioning Israel as a smart transportation center globally and supporting startups throughout their lifetime. But because startups can't really grow within a void, we started by creating a community that brings together all the relevant entities, whether it's the multinationals, the industry, the investors, the government, the academia, all to one community, putting the focus and spotlight on the startups that are here today. Please make sure you're on mute. So as we see smart mobility today, we have 5 sectors, and I'm really happy to pre-announce, we're going to do something more festive about it. Until now, we've seen the sectors as autonomous and connected, mobility services, electrification and energy, drones and aviation, and the last one was maritime. But we understood that maritime is a part of a bigger thing, and we are going to shift this sector to supply chain, understanding that automotive supply chain is very special, and then having a whole sector that will look at shipping, logistics, the future of showrooms, everything from creating a part up until delivering it to the client. Regarding activities, we have the community, which is support on and offline. If you are not connected to our newsletter or groups on different social medias, please do. In the past, I said we're more about bringing humans together. And now, we're bringing them together online. And this is why we decided to do a meeting Zoom and not a webinar. So you all can see each other in this gallery chat. While you'll see the whole agenda today, you can chat with each other. Just make sure you're not sending it to everyone. I've seen those happen. It can be quite embarrassing. So many IPOs and many more to come, and we wanted to help you understand what are the different options between the public markets out there, what is the difference between them, and how do you know which one fits you best. We hope to answer all of your questions today with our super experienced and professional speakers. You're more than welcome to write in the chat to everyone questions while they speak, and in the end of each session, we will do a Q&A live with them in order to answer these questions. So now is your time to think of what you want to say, what you want to do, and have like a consultation moment. Let's start with Ron Klein, the Director of Business Development at the Israel Securities Authority, on how to raise capital in the Israeli public market.
Hello everyone, I'm Ron and I lead the markets development activity at the ISA. I'm happy to be here. In the next few minutes, I'll try to provide you with a quick overview of the possibilities that lay before companies for funding through public channels in Israel. I want to start with the main message, which is whether you are a startup, a growth stage, or a mature company, there is something for everyone in the Israeli capital market. We will now look into each of these possibilities so you will be able to determine for yourself which one suits your company best at its current stage. Let us start with the first solution that fits companies at their earliest stage, which is crowdfunding. I will go briefly over the concept and how it works in Israel. So I guess most of you are familiar with the concept itself, which is to fund a venture by raising a relatively small amount of money from a large number of people. In Israel, it means you will be able to raise up to 4 million Israeli shekels, with an extra million in case you are tested and authorized by the Israel Innovation Authority or by the Small Businesses Authority. You can increase the raising limitation with another million by including a lead investor in the offering. This investor must have a certain expertise in the company's line of business. He or she cannot be affiliated with the company in any way and must invest at least 10% of the proceeds in this specific offering. So in total, a company can raise up to 6 million Israeli shekels using crowdfunding in Israel. There are, of course, investment limitations from the investor standpoint as well. Those limitations are meant to protect the public of investors, and as you can see, they vary according to the type of investor in question. Raising capital through crowdfunding brings light disclosure requirements only compared to going public through a full IPO. So in terms of disclosure, you will have to provide the public with offering documentation, terms of securities, and financial reports. And afterward, there are ongoing requirements that will include updates from time to time and annual reports. Today, we have about 6 registered crowdfunding platforms that have carried out dozens of offerings so far, involving thousands of investors. The next solution is for you if you are a growth company past the seed stage, but still don't feel quite ready for going public through a full IPO process. TasteUp is a private platform provided by the Tel Aviv Stock Exchange aimed at companies, mainly tech companies, looking to remain private while gaining access to a new pool of investors and creating liquidity for its existing shareholders. When listing on TasteUp, there is no need to file a prospectus, and there are no ongoing disclosure and reporting requirements under the Israeli securities law. Not every company is eligible for listing on TasteUp, but if you are a tech company or a VC fund, you are definitely an audience this platform caters to. The TasteUp platform actually kicked off only a few weeks ago and has recently seen its first listings. After I finish, I'm sure Lior will be able to elaborate on the more to come in that context. The next solution, which is considered by many as the holy grail for companies worldwide in terms of funding, is to go public on the stock market through a full IPO process. While in certain global markets you will need to reach a substantial market cap threshold to carry out a successful IPO, which usually means reaching significant milestones in your company's metrics, Tel Aviv allows for a much lower entry point. You can be the same fish in a relatively smaller pond. And that's great for growth, as you will be able to get traction from institutional investors that you wouldn't otherwise get on a large-scale market. Moreover, up until recently, a company looking to go public in Tel Aviv would undergo a very local process. And when I say local, I mean that the company would prepare its offering document in Hebrew, hire a local underwriter that would approach local investors. Everything would be quite local about it. In the past couple of years, we've witnessed another emerging concept of IPO in Tel Aviv, which we call a global IPO. The first was that of the Tel Aviv Stock Exchange itself when it went public. They hired a global investment bank to be their lead underwriter, prepared all the offering documents in English, and approached international investors looking for pricing in line with global standards. On the coattails of that specific offering, we have seen more global offerings taking place lately. This method is especially beneficial for tech companies looking to get the international investors community on their cap table and enjoy similar pricing to what they would have got overseas. And since global markets are the end goal of many companies, the Israeli regulatory framework offers a solution for companies looking to list their stock in other global markets as well one day, which is the dual listing framework. This unique framework allows companies traded on specific stock exchanges around the world to list their securities on the Tel Aviv Stock Exchange as well, while continuing to be subject to the regulatory framework of the recognized foreign market. This means that the Israeli securities regulation takes a step back to accommodate foreign regulation it deems sufficiently protective, so that the dual listed company can have two markets for the price of one regulatory framework. Dual listing is currently available with the New York Stock Exchange, Nasdaq, Toronto, London, Singapore, and Hong Kong stock exchanges, as you can see. Simply put, for you, it means that if you have established your IPO here in Tel Aviv, you will be able to list for trading on Wall Street later on, while maintaining your listing in Tel Aviv. You will have two trading venues while being subject only to the US disclosure regime and the SEC as your disclosure regulator. You'll also be able to raise more funding on both markets based on the same US prospectus. So if we're taking a step back, zoom out and try to look at it as a growth story, a company can file for an IPO in Tel Aviv and continue to grow as a publicly traded company here in Israel, and when the time is right, to use the listing on the Tel Aviv Stock Exchange as a stepping stone for listing on other global markets. This is a value proposition that I think, as of today, few markets have to offer. So, after we went through the various options for raising capital in the public market in Israel, I'd like to mention two other topics that may be of interest in your context as tech companies. So the first one is the concept of R&D partnerships. Until recently, only certain partnerships, mainly oil and gas, were able to trade on the Tel Aviv Stock Exchange. A recent change to the regulatory framework now allows for the listing of R&D partnerships, which will invest only in R&D ventures authorized by the Israeli Innovation Authority. There are a few terms, as you can see, but the main idea is that a tech company will get new investments through the public channel as a holding of such partnership. The scope of disclosure the partnership itself will provide for each portfolio company will be determined according to its specific materiality. There are currently 5 listed R&D partnerships, and there are more in the pipeline. Another issue that may be interesting to note is the Israel Innovation Authority's program to incentivize institutional investors to invest in Israeli publicly traded tech companies. And that will be done through government protection for investments of up to 50 million Israeli shekels in rounds of up to 120 million. This protection is given for the initial investment only and is not applicable for follow-on investments, where the main idea here was to connect the Israeli public capital market to the Israeli high-tech sector. Therefore, the program is aimed at Israeli small tech companies with certain features, such as having a certain number of employees in Israel, investing at least 50% of the R&D expenses in Israel, and having less than 200 million Israeli shekels in revenue. So, if I try to conclude, from the company's standpoint, there may be various considerations when deciding on funding through public channels, from macroeconomic and sectorial conditions to compliance with regulation and disclosure and so forth. I hope that the past few minutes have given you enough of a background to start discussing this issue internally. I welcome you to contact my team and me if you have further questions or if you want further details. And I thank you very much for your time.
Thank you, Ron. These are great instruments for raising capital. And if you have any questions for Ron, please write them in the chat, and we will do a Q&A session right after the next keynote from TASE IPO Market. What are the opportunities for fast-growing tech companies? Lior Navon, Head of Sales and Market Development of TASE, the Tel Aviv Stock Exchange.
In 2020, when the COVID crisis started, and we saw the markets in the US and in Israel, all over the world, crashing down, we thought to ourselves, oh, this year probably going to be a horrible year. But something happened in 2020. In the very beginning, the market froze for at least 2 months. We didn't saw any new company trying to raise capital, and we saw the markets just freezing. But what we've seen that the tech sector is rising in the US and starting to rise in Israel, and we saw a huge rebound in most of the technology companies that basically led this, I would say, rally in the markets during the last year. Now, the way it reflected on the Tel Aviv Stock Exchange is that this year was the first year we saw a huge transformation in both investor appetite towards investing in technology companies, and we saw a lot of companies' interest that are looking to raise capital throughout the Tel Aviv Stock Exchange. And this year, which is very exciting, is the transformation year for the Tel Aviv Stock Exchange. Now, before I start, I just want to take you a little bit back just to understand where we are coming from. Now, the Tel Aviv Stock Exchange have been a non-profit organization for years. In 2017, we've done a demutualization process, which basically take the company and transfer the company from non-profit organization to a for-profit company. In 2019, we've decided to take the company public throughout a global offering. Global offering led by Jefferies Bank. We've done our own global offering in order to pave the way for other companies, since we think that going public on the Tel Aviv Stock Exchange is not a limit to go elsewhere and raise capital from other investors in different markets. And that's what we've done, and more than 90% of the demand for our shares came from US investors. And the main upside for all of those investors were the realized potential of the Tel Aviv Stock Exchange in terms of the technology sector. We thought that the technology sector is not reflecting on the Tel Aviv Stock Exchange the way it drives our economy. Now, in 2020, we had 30 IPOs. If you compare to 2019, we had 7 IPOs and 0 IPOs coming from the technology sector. We had 19 IPOs from the technology sector in 2020, and the way we are seeing and looking on our pipeline for the next year, for 2021, we have about 70 companies that are going to go or looking to go public on our exchange. About 70–80% of them are technology companies. Those numbers are definitely going to transform the way the Tel Aviv Stock Exchange looks, and the indices, the main indices, already transforming. The main index TA35 have almost 30% of technology companies, and this is part of our pitch when we are going to international investor to attract them to invest in our market, which is very crucial to develop this exchange. We've done a lot of other changes in technology in different areas in order to create the infrastructure, but there is another thing, which is the realization that the government also need to encourage the institutional investor to invest more, and they had the Innovation Authority have a specific plan for institutional investors to invest in technology, 2 billion shekels that should be deployed in the next 18 months. And as we are seeing, a lot of things actually have connected along the year, and the next years are definitely going to be the technology sector going to continue to be dominant, and we think that Tel Aviv Stock Exchange is going to brand as a technology hub, and that's what we have for the next couple of years. Now, our technology sector is pretty much diversified. We have different sectors. The clean tech have done a tremendous tremendous growth, not just in Israel, in different other markets in the world. That, let's say that in Israel, the market grew from $1 billion market cap to almost $8 billion market cap just in 3 years, which is huge. We saw the clean tech shares rising in the US, in other markets as well, in other sectors as well. I'm not going to go deep to each and every one of them, but as you can see, it's pretty much diversified. We have 136 companies. Now, our indices, if we compare the Nasdaq index, which is definitely the first place to go when you want to benchmark the technology sector, you can see that in 2020, our Tech Elite index, which is the main index that comprise all the technology companies, have done almost as Nasdaq, 3% less than Nasdaq. I think it's super impressive if you compare it to any other index in the world. As you can see, the S&P 500 have done 15%, the MSCI emerging market 14%, and if you can see other markets, also the Tel Aviv Stock Exchange technology sector index have definitely outperformed others. This is definitely will help you to market the tech startups when we look forward. Now, just to show you a brief of how the pipeline, not the pipeline, the actual IPO looks like. So as you can see, we had companies, of course, from traditional sectors, but most of the companies that IPO coming from the tech sector. One thing that is maybe important to highlight is the change that we've done in the offering method. In Israel, the book building method weren't available up 2 years back. All of the offerings in Israel have done through a Dutch auction, which is not very common method if you go elsewhere, any other stock exchange in the world. Basically, the main method is book building process, which helps, of course, the underwriter in the company to select the shareholders and control the book during the IPO. And in Israel, as we've seen that, this was a huge driver for the institutional investor to take a major part in IPOs, since the performance of every IPO, and I will jump into the performance of every IPO, as you can see, or most of the IPOs were extremely impressive if you compare it to any other places in the world. And we think that the main driver were basically the offering method and the type of companies. And of course, I think another thing that may be worthwhile to mention is the retail participation. We had huge growth in the number of new accounts in 2020, and also about more than 30% growth in our daily turnover on the Tel Aviv Stock Exchange, led by retail investors. I think this was also very crucial to see those performance, which is not something that is trivial. If we look back a couple of years, the IPO market weren't that successful in Israel, and as we can see it, we can compare it to other markets like Nasdaq, when IPOs going 50-70% the first day. We saw numbers like that in Israel as well. Of course, that's another driver to invest. Now, I want to share with you also a new platform that we've launched a couple of months ago. TasteUp, you probably heard about it. This is a very unique platform, the first in the world. It's a private market that basically allows private investors, such as accredited investors, institutional investors, to invest directly throughout the stock exchange in private company shares. Now, technology companies can basically list on the stock exchange without becoming a public company. You don't have to file prospectus, you don't have ongoing disclosure obligations, and you are listed and traded like any other shares on the stock exchange. This is a very unique model. We have 3 companies that already announced on the listing, and they are currently in roadshow, and we think this could be a very exciting platform for the next couple of years. Could definitely be relevant for early stage companies. Now, what is the advantage on our eyes to be listed on the stock exchange? Basically, since we are a small market, there are many advantages. The cost is 1/5 of going anywhere in the world, especially Nasdaq is about 1/5 of the cost. There is a huge advantage for companies that are not big enough. The threshold to go public on Nasdaq is just becoming higher and higher. If you are less than 1 billion valuation and have less than 100 million ARR, probably this is not a relevant market for you. Therefore, you can start and grow on the Tel Aviv Stock Exchange. We've met many entrepreneurs that it's not the first startup for them, And those guys are looking to grow companies for the long term, and they want to actually connect with the public and help, you know, private investor to invest in those companies. What we've seen in the market, that most of the, I would say, the growth and most of the value have created in the private market and not in the public market. We want to change that, and we see more and more second timers, entrepreneurs that actually done their second and third startup, that are looking to go public and raise capital throughout the public markets as their preferred method of raising capital, and as the home field, since, you know, the COVID is definitely helping us to position ourselves as a great alternatives for those guys. This is how we see that. Now, just one word about the global offering. We've done our own, as I mentioned. The opportunity here is very simple. You take the company public on the Tel Aviv Stock Exchange, but you go for a global offering, which means you go for a global roadshow. You meet investor in the US, you meet investor in Europe, in Asia, but the listing is only on the Tel Aviv Stock Exchange. We've actually realized throughout our own IPO that the demand, the allocation, that some of the funds in the US, their mandate is to invest outside of the US. So if they have the opportunity to invest in companies, especially fast-growing Israeli technology companies, in other exchanges, they're happy to do that. So the demand is there. We are now helping to develop this market, to add more underwriters to distribute. But this is definitely an opportunity. You can report in English. You can file your prospectus in English. You can report in English. So everything will be around that. Now, just to say a few words about the dual listing arrangement. After you grow your company in Israel, you can always dual list, leverage on our very unique, I would say, infrastructure that we've created here. I would say the ISA have created 20 years back. And you can actually list your company in the US and maintain your listing in Israel, just relying on one regulatory framework, which is the US or any other exchange in the world. We're also helping to develop other markets, such as, you know, the Asia, throughout Singapore partnership. We have new partnership with Abu Dhabi. And as you can see, that the trading volume on the Tel Aviv Stock Exchange is pretty much substantial. If we look on 27% on average daily turnover of the dual listing companies, this is a big business for us, and we will continue to develop it. As for now, there are some companies that we're definitely seeking to bring as a target to list on the Tel Aviv Stock Exchange as part of this arrangement, and we are sure and confident that we will succeed to bring all of the Israeli companies home. If you have any other question, you feel free to reach out and send me an email. I'm available anytime, and have a pleasant day. Thank you very much.
Thank you, Lior, and please join me, Lior and Ron, for a Q&A session. Ron, hi. Let's start with you. I think, Ron, you can answer this one. Is there governmental support if a company raised over 120 million shekels?
Okay, so the protection for the total investments, like I mentioned, made in each company are limited to 50 million Israeli shekels. But since the program is aimed at small Israeli tech companies, there is also limitation for the size of the total round of funding itself, which is set to 120 million Israeli shekels. So if your specific round is bigger, this protection is not available.
Okay, cool. And Lior, you talked a little bit on the TASEAP. Yoel from Silentium wanted to ask just a little bit more info. Can you recap just the top 2 points of understanding if the TASEAP is relevant for the startup? And I'm sure they can contact you after directly, right? If they need more information?
Sure, of course. So basically, TASEAP, we didn't determined any threshold for the platform. But just to be very frank with everyone on this presentation, TASEAP basically is a platform that is basically made for private investors to connect them together with institutional investors with private companies. Now, the thing is that what we've, from our experience during the last couple of months, we've met more than 400 companies, and we've tried to work with the market to understand what will be the sweet spot for investors. What we are seeing today is if you're a very small company, let's say early stage company, and you are looking to raise $1 million or something around that, that's probably not the right platform for you. I would say that if you are around a startup looking to raise 5 million, 10 million US dollar and up, that's definitely the platform for you, and that's where we are aiming to go. If you want more information, you can please reach out to me. It's probably going to be a longer discussion just to understand your business, and then making sure that that's the right fit for TASEUp. But in general, I would say that we don't have any threshold, so anyone can try. So feel free to reach out, and we will be more than happy to meet you for a coffee and see if that fits.
Virtually.
Virtually, yeah.
So can either of you share a list of examples of high-tech companies that Tel Aviv Stock Exchange IPOs with company value and amount raised and benchmarks to Nasdaq if available?
I mean, yes, we can share. I don't think that it's relevant to answer now. We have, of course, list of companies. We can share that, and you can share it with everyone here in the conference, and I will be more than happy to share some names. In general, what we've seen this year is that we have about, let's say, 5 to 6 companies that IPO'd in a valuation between 250 million US dollar to 400, 500 million US dollar that have raised between 50 to 100 million US dollar in capital raising, and a lot of companies that raised below that mark. So I would be more than happy to share all the information, the list of traded companies. You can also find it on the website, on Tel Aviv Stock Exchange website. You can find all the information and just search for yourself.
I discovered the Maya yesterday, and I'm like exploring it now. It's very, very interesting. I think what mostly they're looking for, the startups, are kind of benchmarks. And maybe, Ron, you can talk also a little bit about, a bit of tips, like how do I know I'm ready? What should I look for? How to take the first interest, and what is relevant for each type of startups. Leo talked about round A and up, but one startup asked, what is the biggest mistake that a startup did deciding to go into an IPO? So I think they're looking for a bit of tips.
Yeah. So first of all, when a company is deciding or considering going public, I think they need to be familiar with the main market players. They should hire an underwriter that will, go with them hand in hand in the process, and they have their law firms that will prepare the offering documents, the prospectus, and so forth. And they will be able, also to advise on when is the right time, what will be the right market cap for them to go with, and so forth. We are also nowadays finalizing together with the Tel Aviv Stock Exchange. We're working on the guidelines for IPO in Israel, which I'm sure will be helpful in terms of getting to know, walk you through the process, getting to know who you should work with, and what are the timelines, and who are the main stakeholders in this process. I'm sure in a couple of weeks it will be out, and it will probably be very helpful for you. So
maybe I can add to that just another tip for the listeners. I think that the one thing that people do not realize when they go public, that's not a one-shot event. It's basically like getting married, which means you need to look very long-term. Okay, the IPO valuation is not your focus in the very beginning. You need to keep in mind that investors need to make money in your IPO, and you need to build trust with those investors. So first hire a PR and IR, okay, in the very beginning, and invest a lot of time, okay, educating investors and talking to the market. Okay, it's not just okay, let's go public and that's it. I'm done. And I think that's the first thing you have to keep in mind. A lot of entrepreneurs asking me what should be the valuation in the IPO. The valuation in the IPO is just the very beginning. Okay, you need to build value over time. You need to create trust with investors, and that's something everyone needs to keep in mind when deciding to go public.
Yeah, I think what's special about public investors is that it's a lot about telling the story correctly, so they understand it, so it matches, their vision on the domain, the industry, because it's so open to many verticals. So being able to tell that story correctly. Last questions. What do you think is one of the increasing verticals now in the market? Do you think it's mobility or healthcare or any other verticals that you see in incline?
I would say it's pretty much diversified. I think food tech definitely, agri-tech definitely, clean tech of course is here, as I mentioned in my presentation, is one of the largest sectors in tech, in our tech ecosystem on the Tel Aviv Stock Exchange. Mobility is definitely here. You have some great example later on that's going to present here. So yeah, the appetite is definitely there for technology. We will see more cybersecurity companies. We will see more other verticals that we haven't seen before that will go public in the next couple of months. But it is pretty much diversified, and you'll, as an investor, you probably have the option to invest in different sectors that could be very interesting. I would say that if you look elsewhere to Nasdaq and you see any trend that is going and succeeding there, it will definitely going to catch some good traction from investors here as well.
Cool. Thank you so much. You're both superstars from preparing to doing this event. So thank you a lot for your time. And we will share your contact information. Once you have the guidebook on out, then we'll be happy to share with the community. And let's continue help startups IPO and crowdfunding and all of these other great instruments that we learned about today.
Definitely. Thank you very much.
Thank you. Thanks, Orly.
SPAC is a word that we've heard so many times in the past month. Let's hear from Danny Ackerman, the Managing Director of Goldman Sachs Israel, about its opportunities and the USA market for IPOing. Don't forget to type your questions in the chat and we'll do a Q&A session afterwards. Thank you, Danny.
Thank you, Orly. Hi, everyone. So I'll run quickly through a few slides and leave hopefully some time for questions to give you a perspective more global. It's more US centric, my stats and commentary, but feel free if you have questions about other parts of the world, to the extent that I'm able to answer, we'll be happy to do it. So let's first start in terms of setting the stage. This past year, 2020, was a very tumultuous year. As you can see, I think no one predicted that at the lows of March that we're going to have such a fast, it is obviously looking like a V-shaped recovery, where the Nasdaq appreciated more than 40%, the Russell more than 15, 16%, S&P, as you can see, and the Dow ended in positive territory. This is obviously was the setup for one of the most successful years in IPOs, as we'll see shortly. I think it goes hand in hand with the VIX. This is the Volatility Index, and essentially what you can see here in March, this is the mirror image of what we saw in terms of the stock price appreciation of the various indices. So 82, almost 83 in the index was the highest level in the VIX history, even more than what we saw in 2008 and 2009. This volatility subsided. The market was basically shut down in March, April, May, except for a couple of rescue financing. It's at this point in a pretty, I would say, accommodating territory. We're presently at around 22, 23 in the index, where the average for the year was 29. And the 5-year average is still lower, it's about 17, but it's certainly a very comfortable level that we are in starting around June timeframe. Now, what was the impact on IPOs? So we went back and checked. You can see here all the IPOs from year 2000, which was the record at the .com level. The numbers that you see at the top of the bars they are in billions of dollars. So back in 2000, we had more than 100 billion of supply of IPOs. This is all IPOs, not just technology. And you can see the ups and downs over the years. 2014 was a very good year as well, 92, and then 84 billion, to put that in context, in 2020. Now, the 2014 number is a little bit misleading, as you will see shortly, just because in 2014, Alibaba had an IPO of $25 billion. So out of the 92, 25 was Alibaba. So the real number is more like 67, which puts the 84 that you see in 2020 to be the second largest year in overall IPOs relative to year 2000. I think also interestingly, the numbers at the bottom. So the first row, the number of IPOs, we had 349 IPOs. You see all the way on the left-hand side below the bar for year 2000, 349 IPOs back in 2000. We had about half of that, 172 in 2020. The number was higher actually in 2014. And interestingly, leading up to the next slide, the line below that, the percentage of technology IPOs out of total was 44% this year. It was only 32% back in the year 2000. So this is the overall IPOs. I think what will be more interesting for this crowd is the technology IPOs themselves. So out of the what you saw on the prior page, a subset of the technology IPOs. So in year 2000, we had a volume of 33 billion IPOs. In 2014, as I said, big year because of Alibaba, 25 billion, but the total was 37, which is the same total we had last year. But again, if you put it apples to apples and you take out the Alibaba, the major one, and you also look at 2012, where Facebook had a 16 billion, and 2019, where Uber has an 8 billion, the 37 billion that we had in 2020 was by a wide margin the largest year over the last decade, and also higher than the heights that we reached in year 2000. In terms of number of IPOs, I think it's very interesting. As you can see at the bottom, all the way to the left, in the year 2000, we had 150 IPOs that produced $33 billion. This year, we had a third of that, producing more billions of dollars of IPO supply. What is the conclusion? Basically, the conclusion is that companies are waiting to go public. They're going later, they're going bigger. We'll see that shortly in one of the statistics. So this is a meaningful differential. The companies going public are not hundreds of millions of dollars, they are billions of dollars. And we'll see that also, some of that we saw already in Israel, and we'll see that 21 will be a very busy year, hopefully, for Israeli IPOs. Going to tell you a little bit about the profile of those technology IPOs. So this slide on the right-hand side shows how many of those total IPOs that you saw on the prior page, how many of the 47 IPOs in technology were profitable versus non-profitable. So roughly 60% were profitable, and still around 43% were unprofitable. In terms of sectors, software and internet together constituted roughly, call it 56%, so a little bit over half. We also saw fintech, services, this is all in technology, education technology, and hardware dominating the space. In terms of the size, so the market capitalization, starting all the way to the left, less than 1 billion market capitalization at IPO is only 17%. It used to be that a company that reaches 500 million is coming out to market. This was quite a good benchmark. Some of the most successful Israeli companies that came out, like Wix and Varonis and CyberArk and others, went out with sub 1 billion. The picture changed completely over the last 5 years. So you can see the highest bar here, 1 to 5 billion. This is second to the left. 54% of all IPOs were between 1 to 5 billion, 13% between 5 and 10 billion, and 15% were more than 10 billion at IPO. So Playtika, for instance, is $13 billion now. So altogether, what we can see from this slide, and this has been the case, I would say, for the last, call it 4 to 5 years, companies have better financing in the private markets. They're waiting to come out longer. All IPOs that will come out of Israel, we're talking about quite a substantial number this year, will be north of 1 billion. At least those that will come regular way. We'll talk about SPACs in a second. In terms of the growth profile, there were some remarks about growth earlier. So of those tech companies that came out, most of them are very fast growers. So all the way to the right, 30% of them had a CAGR of revenue 40+%. So super fast growth, particularly that they're larger. You have to consider this is not company that's growing from 20 to 40 million dollars in revenue. Most of these companies have hundreds of millions of dollars of revenue, and they're still growing at 40%. About 30% were 20 to 40, and there is still a contingency of roughly 40% that grew less than 20% at IPO. Overall, the last year was super successful for investors who invested in IPO. So the tech IPO index, 83% up relative to the S&P, which was 18% up. So this kind of creates a vicious circle in a positive way, perpetuating the success of those investors who invest in IPOs. They cannot sit on the sidelines. They have to invest in order to create this alpha type returns. And this frenzy kind of feeds on itself, including what was mentioned earlier, the retail bid that takes the stock prices even higher. It's very important to note in the US markets, most of the allocation, the top IPOs, they're not going to retail, they're going to institutional investors. So roughly 80, 85, sometimes 90% of the order book is being allocated to institutional investors. Then the retail buys more. So the stock price jumps that you see is mainly because of that retail bid that takes this limited supply, 10, 15% of the company, limited supply, they take it up in a significant way. So very successful year, as I said. Lastly, the last thing I want to say is about SPACs. SPACs became very topical in the past year, as you can see. First of all, 50% of all IPOs were SPAC IPOs. Now, SPAC is a Special Purpose Acquisition Corp. That's the acronym. What it is essentially is another way to go public. We were honored to do the first SPAC in Israel with Innoviz. Omer is here later to tell you the story. Very successful transaction. So what SPAC is, and I'm happy to answer some questions, is essentially a blank check company. Investors are investing for 2 years. They're investing, let's say, 200 million. The company doesn't yet have, the SPAC itself doesn't yet have an operating entity attached to it. And then the SPAC has 2 years to go and find a target. Once a target is found, and the latest that was announced is Ion and Taboola, for instance, a week or so ago. Once a target is identified, then there is a merger between the SPAC and the operating company. And then after the merger is approved and the SEC approves all of the documentation, the company becomes public. So Innoviz will be publicly traded soon. And so is Taboola and others that will follow. Why is this interesting? It's interesting because there are certain elements that allow for things that are not permitted during the IPO process regular way. For instance, you can give projections. You're unable to give projections in a regular way. You can have a price set agreed upon between you and the SPAC, which you don't necessarily have when you do the IPO. You have a book building exercise. And there are other differences, but this became very popular. And as you can see, in 2019, we had only 57 transactions. In 2020, we have 246. Just in January, there were 100 SPAC IPOs in the United States. So let's see where it takes us. But I think if the markets hold, 2021 will be a record year, even relative to 2020 in terms of SPACs. So this is what I've prepared. I'm happy to answer any question if there are any questions.
Yeah, thank you, Danny. This is the time for everyone to write some questions down. I have two questions for you. The first one, you talked about SPAC. It has a 2-year lifetime span. And yet we've seen a lot more use of that in the past year. Is this more a trend, or are there more SPACs out there right now?
Well, look, the one thing, I have those discussions literally on a daily basis with many companies. And the most important thing to remember is the SPAC route to become a public company at the end of the day is just a different way to be public. And at the end of the day, the company needs to ask itself, am I ready to be public?
How would
So
you know?
there are certain benefits, certain considerations, but I think what certain companies forget is the fact that, you really, I mean, there is the day after. This is not like a hocus pocus thing that you kind of circumvent certain things and you suddenly in a different planet. So uh, at the end of the day, the company will be public and it will have to report quarterly and it will have to manage the street and it will have investor relations with the analysts. So I think it's right for certain types of companies. I think others can choose one way or the other, regular way or the SPAC way. I think SPACs are actually a very good tool for the right instances. I think you will see that SPACs are going to be, in my opinion, misused, and some companies that are not ready to go public will go public. And then you have the risk of what happens the day after. When a company is not ready to be public and it's public, many things can go wrong. So that's kind of word of caution for the entrepreneurs and the CEOs in the room.
Okay, and what would you say is the potential downside of an IPO via SPAC?
So, look, at the end of the day, the book building exercise that you go through is an important price discovery, and it's not available in the SPAC. To some extent, you do it through the pipe, but typically it's one party shaking hands with another party, which is the SPAC and the company, and they agree on value, and that value might or might not be right. It's getting validation through the pipe process. The pipe is the private investment in that public entity from long only investors, similar to the IPO process. But one downside of the SPAC is that you are not going through that price discovery, and it can also hurt the valuation. So people sometimes think, well, through the SPAC, I'm going to get a higher valuation. Not necessarily. Sometimes this book building approach, the roadshow, which you can increase the price during the roadshow and price outside the range, that can get you sometimes to even higher valuation. There is also no immediate research coverage available. There are ways to deal with that, certainly, but it's slightly a different process from that perspective. And what you need to find also in a SPAC is a SPAC sponsor that is right for you, because it's a marriage to some extent. It's a merger, and the SPAC sponsor comes to this marriage from the one hand and the company from the other. So the ability to have congruence there and ability for the SPAC partner to add value to the company is important. Sometimes also it's overlooked. And there are certain SPACs that are very, very accretive to the target companies. They have specific expertise in a certain domain. They can help open markets. They sit on the board. So it's an instrument that needs to be used properly. That's my point.
Understood. You're so interesting. So I want one last question, but we're running out of time. Just in 2 words, outside of the US, what is the second and third global market for SPAC?
So I'm not sure about SPAC specifically. Obviously, that we have the markets in Hong Kong and China. I'm not sure for SPACs where they're also approved to be used. By far, the US market is the largest one. Actually, many of those SPACs come to Israel. They look for targets, and you're gonna see more and more companies going through the SPAC process. It's faster to some extent. You can get there probably 2 months quicker. A regular IPO takes 6 months from start to finish. This could take potentially 4 months, sometimes even a bit shorter. But again, my word of caution and advice here to the CEOs and CFOs, you have to be really ready to be public. If you're ready, you can go through that way or that way. Some way might be, for some companies, better through the SPAC, understandably so because of projections, particularly for pre-revenue companies. But don't forget, at the end of it, you're public.
Understood. Thank you so much, Danny, for your
Pleasure
time.
to be here. Thanks for
And
inviting
for
me.
your thoughts on this. So talking about global markets, we've asked CEOs of the community which markets are relevant other than Israel and USA, and we learned that Australia and Canada are interesting to you. We're happy to invite Liat Vigdor, partner at High Tech and Venture Capital and head of the Australian desk of Shibolet Law Firm, and afterwards her colleague from Shibolet, Amir Iliscu, which is a partner and high-tech venture capital as well. If you have any questions for them, please write them in the chat and we will do a joint Q&A session in the end. Thank you, Liat.
Hi, everyone. So I'm Liat Vigdor from Shibolet. The purpose of this very short presentation is to probably give you a glimpse of the process of listing on the ASX, which is the Australian Securities Exchange. We will only have, I would only be able to briefly walk through with you the basics and fundamentals. I'm happy to share this presentation afterwards and then, continue maybe discussion one-on-one on whoever finds it of interest. So let's go. Why Australia? Why Australia? A number of key factors, probably close to 30 years of uninterrupted growth, and it's positioned as one of the world's fastest growing regions still. It's the world's 9th largest exchange by market cap. It's actually a gateway to a global capital. 40% of the investors are international. Crowds that we don't reach on a customary way, Malaysian, Indonesian, Chinese, Australasia, international investors with access to large capital. Australia has a robust regulatory environment. In actual sense, you know what you're getting into, there are no surprises. One thing you should know about Australia is that the institutional and the pension funds have been switching in the past, I would say 5 or 6 years, from customary mining minerals and oil into what they call innotech. That's innovation tech. They don't call it they don't call us the startup nation yet, but they call us the innotech nation. Australia has an active all industry single board capital raising platform with a wide range of small cap and growth company, 40%, roughly 40% out of which are 10 million to 15 million market cap. The governing law and the corporate governance in Australia with respect to Australian entities are based on the English and common law, and the corporate and security laws are similar to those in Israel, so very easy access. Now, the valuation, which is always a question, are reasonable. I chose the word reasonable because we haven't seen anything fantastic. We haven't seen anything below or less valuation than in other markets. And one advantage the Australian market would have is that the secondary rounds and the additional rounds going forward are easier to conduct. Now, what is that? Now, I said, why not Australia, but I'd rather call it, what are the challenges? Now, as you all know, it's far away. It's 9 hours difference. It's different time zones. When we wake up, they have basically finished their day. Obviously, there are culture barriers and somewhat different manner of doing business in Australia. Definitely much different than in Israel. It's an Australian dollar market, so it is more expensive. Please bear in mind, you'd have to conduct a roadshow, you have to pay local costs, you have to pay for travel. You have to pay for local managers and board members, and obviously for the operation itself. It's cost. It costs a lot of money, basically more than the costs and expenses we see in Israel, all in Australian dollars. Now, 50%, another challenge would be looking at the history of the floats. 50% of the current 23 Israeli or Israeli related listed companies are struggling. You can actually see red and green on equal par. Some of the Israelis company have actually experienced hostile takeovers, and some were even delisted. Now, Australia, in terms of the team supporting the company, Australia actually values seniority. They want to see experienced, qualified managers alongside the young and vibrant entrepreneurs. It has to be the perfect combination. If I may be blunt, they really don't want to see just kids handling the business, as talented as they may be. You'd have to have familiarity with your book of institutional investors. You can't run it by Zoom, by Teams, or by any other digital or virtual manner. And you'd have to have a good product, service, or technology up and running. As opposed to what happened 2 or 3 years ago, the ASX Australia is no longer the garbage bin of the Israeli companies which could not raise funds elsewhere, including not in Israel. So therefore, just if you have an idea, if you have a prototype, if you have a very good story, or if you are sharing the glory of the 8,200 service military, will not suffice anymore. And also, last thing is that you would have to have a solid intention, a plan, or show part of your use of proceeds going to better the local community. Now, this is a slide I'd normally show where when people are asking us, entrepreneurs are asking us, what would be the right stage of my business to follow up on an IPO or an RTO for purpose of this presentation. Now, on this issue, I must tell you, and if you take something out of my words right here, please note that the ASX, we want to see an established business that is commercialized or close to commercialization. That is, the company that is to be listed is a real business. It's not just a simple startup or a company with, I don't know, with simply a concept. The entity will actually need to show the ASX that the funds, the investors' funds, have been spent on the asset, and that is revenue generating or close to revenue generating. Now, if you see the term value of debt, it's not my term, of course. It's the Australian term for the period of time that they really don't want to take the company. It's the angels and family and friends and the seed capital stage that is not of interest. We are starting to see interest when the VCs come in, when the private equity comes in, when there's a one or more strategic alliance, and then that's the right time to actually look to float, to register for an IPO or an RTO. Now, for more specific requirements, this would be the next two slides would interest most of you. The criteria for the admission. So the key admission requirements which are applicable Whether an entity seeks an RTO or an IPO doesn't really matter. We have two tests as a criteria. You'll have to satisfy at least one of them. So you'll have to satisfy the first test is the asset test. In order to satisfy the asset test, the company must either have a market cap of 15 million Australian dollars or hold at least 4 million in net tangible assets after the deduction of the cost of the capital raise. This is one test. Or if we switch to the profits test, then the company would have to satisfy the profit test by having at least 500,000 Australian dollars in consolidated profit for the 12 months prior to the admission. These are the two tests. If you qualify for either of them, we're good to go. Naturally, most of the entities would satisfy, as you can imagine, the asset test rather than the profit test. But please make sure you understand that if the entity satisfies the asset test, then it is subject to additional requirement of having at least 1.5 million Australian dollars in working capital. These are the tests. Now, if you may note, there's also a requirement for a spread, a number of shareholders. Now, any entity that would go or would want to pursue an IPO must have at least 300 non-affiliated security holders who own an unrestricted parcel of the main class of securities with a value of at least 2,000 Australian dollars each. This, of course, would be under the liability of the underwriters or the investment bankers. That should not be a worry, just for your understanding that this the spread needs to be as wide and as possible. Let's go to the last. I'll be quick. Let's go to the last slide, which is, of course, what everyone is interested in. So the time frame for an IPO or an RTO is basically the same. I would say that an IPO could be quicker, but only by, I don't know, a week or two. But the time frame would be anywhere between 4 and 5 months, and you'd have to do a serious roadshow to present the company, and the total cost and expense, which is always the hardest part, is, as you may imagine, a derivative of a number of parameters. There are more, but I've listed 3. Is the valuation cap, and interesting enough is because we have when the valuation is high, that would reduce the cost. It also depends on how much you want to raise. The higher you raise, the higher the cost is. And last but not least is you may waive or a part of the cost by granting your service providers, your bankers, your investment bankers, and the underwriters a larger chunk of the debenture you would issue, and then they would probably waive part of the cost. All in all, you're looking at around 350K Australian dollars. Probably half of it would be contingent upon actual float. Happy to follow up with any of you that found this presentation of interest, 101, and I can send you all the presentation.
Thank you. Next up, we have Amir to talk to us about the Canadian market. Liat, since we're going a little bit over time, if it's okay with you to answer by text in the chat box the questions that arises.
Sure.
Amir, the stage is yours.
Can you hear me? Does this work?
It's working perfectly.
Wonderful. So I'm now let me know if you can all also see the presentation that I'm sharing.
Yes, you can go ahead and go into preview mode.
Wonderful. Okay, so thank you very much for letting Liat and myself talk and join you today. It's an honor to be here. We're very excited about mobility in general, and we think it's a great opportunity together with what's going on with the capital markets. And I'm particularly pleased that Liat went first, because I think not only did she do a wonderful job, but most of what she said applies in one way or another with a few nuances to Canada as well. So you can see going public in Canada, we have a maple leaf instead of the kangaroo. That's one big change right there. Now, we tried, when Liat and I spoke before the lecture, we tried to give you the most value for the lecture, to try and kind of stick to the same structure and answer the same questions. So why Australia? Why Canada? Canada is an incredibly advanced and sophisticated market, which has been progressively building itself up and demonstrating continued growth for a really large number of years. They're in North America. They're a stone skip away from the big capital markets in New York, and that is discernible in their regulatory framework as well. The second thing is they're really pro-Israel as a rule, and it doesn't go without saying, because we're not always the easiest folks to like in Israel. There's a lot of wealthy private individuals with family in Israel. There are plenty of wealthy Jews in Canada. And in general, we as Israelis, we haven't managed to spoil the very good first impression we tend to make yet in Canada. And I'll talk about that in a second. The third big point is the low listing requirements, which again, like Australia, it's one of the really, really big and attractive points to go in Canada. They are actively seeking to attract A, technology companies, B, Israeli companies, and C, companies that are in the process of growth and need further nurturing and support. To that end, their listing requirements are far lower than Nasdaq and even Tel Aviv, and are pretty close to the ones in Australia. $5 million worth of equity, for example, which is incredibly low, and a number of different alternatives. As you'll see further down, they even have separate sectors for smaller companies to support trading in those. Canada markets have a very, very clear pathway to Nasdaq. If you grow to certain criteria and you meet certain regulatory check the boxes, then you have kind of a built-in way to graduate, as it were, from Canada to the big leagues. So that's one of the key points in attracting companies to Canada. But, and this is my next point, it's not as onerous and as burdensome as going straight to Nasdaq. You don't have to go through SOX, Sarbanes-Oxley, which is the piece of regulation that it creates a lot of burden in terms of regulatory reporting in Nasdaq. So that doesn't apply in Toronto. So it's a good place to kind of cut your teeth and get started. And lastly, which is very important, the costs are significantly lower than North America. The lawyers are cheaper, the bankers are less expensive, the regulatory process and the accounting, it's all a fraction of what it would be in the States. Where to list in Canada? Canada has, and I mentioned that, the TSX stock exchange, and they've even have the TSX Ventures stock exchange, which is a smaller version intended for even smaller companies. A lot of Israeli companies just aim for the TSX Ventures because they have lower numbers, and that lends itself well to them. And one of the things you may have seen, I've certainly seen, is that in the past few years, back since 2017, both these stock exchanges have aggressively and with determination targeted Israeli technology companies. They have their officers come visit and lecture in Israel. They have a person on the ground here in Israel called Yossi Boker, who's trying to help companies get there. He's a really nice guy. You're welcome to reach out to him on LinkedIn. They want us there. How to list in Canada. So just a few words, because again, first, I'm running out of time, and secondly, I don't want to get over technical. I just want to give you a few pointers. One of the main sources of attraction is something they call a CPC, a capital pool company. It's kind of a built-in SPAC structure whereby a CPC is a small SPAC which raises money from the Canadian public. They need to have at least 300 shareholders. And then that SPAC finds an opportunity, a target technology, and merges with that technology while doing an offering on the stock exchange to the public. It's kind of a built-in mini SPAC. And the way that typically works is, while there are a few CPCs out there that are already open and looking for technologies, what actually happens is that Israeli technology companies, mobility companies, go out, retain an investment banker, and then they kind of create their own SPAC. The investment banker assists them in forming the initial SPAC, which is only required to raise like $300,000. And then it's used as a platform for a further offering in Canada. So this mini SPAC CPC structure is incredibly attractive because all you need theoretically to get underway is your technology company, an investment banker, and funds to the tune of just $300,000 to fund the CPC. And then you have to tack on accountants, lawyers, bankers, and so on and so forth. But as an initial structure, it's incredibly attractive. The criteria are sector specific. So mining industries and mobility will be treated differently, and that's actually a good thing. And lastly, there are about 6 or 7 really premier investment banks in Canada. You need to reach out to one of those 6 or 7 because there's a bit of a gap to second tier, and the first tier is actually interested in working with Israeli technology companies. So make sure you diligence your investment bank and get a good investment banker. There have been a large number of Israeli IPOs. I just listed a few of the big ones. We at our firm also happen to work on a few of those. A lot of companies went down this path. Now let me get to my last message before I get yanked out of the presentation. The major downside, there's 2 major downsides. One is the time zones, which Liat already mentioned. The second one is you need to get the right investment bankers. The first one is an interesting point in time because one of the things that happened was back in 2017, they started aggressive marketing. By 2018/beginning of 2019, a lot of Israeli companies, literally in the double digits, started exploring CPC IPOs on the TSX. I think over 10 Israeli companies listed in that structure throughout 2018. They were welcomed very warmly by the market, by all the wealthy Jewish/Israeli Canadian expats that lived in Canada. It all worked well. They had fairly successful IPOs at good valuations. And then a year down the road, a lot of these companies underperformed on what they told their investors they would do in a year. And again, I want to choose my words carefully. I mean, it wasn't necessarily their fault. Sometimes it was market conditions. Sometimes they were over optimistic in what they presented to the market. But at the end of the day, a year after the IPO, pretty much almost every single Israeli company in that batch underperformed, which caused a fairly big wave of miscontent with Israeli technology companies. I went back throughout 2019 to try and consummate additional IPOs for Israeli technology companies in Canada. And the responses we literally got from the institutional investors were, we're still trying to see where the stocks you sold us a year ago are going. 'Cause
Amir, thank you so much for your pearls, but we have to continue. If it'd be okay with you and everyone, please, if you have any specific questions, then please write them in the chat and Amir will be happy to answer them directly. I see Liat already answered questions of many of you. So if you have any specific questions on Canada, then please write them in the chat. We will finish off with La Crème de la Crème panel from learning from CEOs that IPO'd it like it's hot. We wanted to start the event with the music of Drop It Like It's Hot, but royalties and stuff, it was too short of a notice. So I'm happy to invite here Chen, the new EcoMotion community manager, which will lead and moderate this discussion together with Oren Ozer, the CEO and founder of Electrion, Oran Dror from Axilion, and Omer Kalaf from Innoviz. EcoMotion was created in order to create knowledge share. So let's learn from each other and get the tips and tricks. Enjoy.
Good morning, everybody, and thank you, Orly. Where are my guys? Omer, Oren, Oran, where are you?
Hi. Hi. How are you?
Hi. So I hope you feel amazing this morning. I want to start because we're a little bit short on times. So the three of you went public during these 2 years. Well, Oren, actually, you entered the stock market before Oran and Omer. So I guess that makes you the most experienced one here. Actually, you were the one that inspired Oran, the CEO of Axilion, to go public. So let's start with you, Oren. How did you know that it was the right time for you to go public?
So actually, it was very interesting to hear everyone before. And I think that actually a few years ago, when we started discussing about raising funding for the company, and once we analyze the process and the round of investment that we need to do in order to meet our goals, which is to build a real company, to build a real product, to be dominant in the market, and maybe to lead the market, then you understand that at the end of the day, the investors will ask to see some profit. And then you'll face the dilemma if to do exit or to do IPO. So you understand that IPO is a valid option to raise funding, and this was the point that we went to IPO.
Perfect, thank you, Oren. And Oran, the next question is for you, real quick. You were listed only a few months ago, and you managed to raise very large amount of money in a short time. Is fundraising the reason you went public?
Yes, absolutely. So thank you very much, EcoMotion, for inviting me today. I was inspired. I remember 2-3 years ago, I was with my co-founder. We were 2 people at EcoMotion event, and now we're over 50 people in a public company. So thank you, Orly and EcoMotion team for all the support throughout the years. And again, Oren was my inspiration, why to go public and why to go public in the Israeli Stock Exchange. We went public just a few months ago, and as you said, we did our last round. We raised about 61 million shekels from leading institutional investors like insurance companies, private equity firms, and more investment and others. It actually took us about 4 hours to do the round by ourselves. We simply picked up the phone, connected with the investors, told them the story that we're raising. In 4 hours, we raised the amount. And this is very, very different as a public company to raise funds for institutional investors while all your books and all your revenue and projections and all the due diligence is already available instead of going and chasing, VCs or private investors. So yeah, Oren was my inspiration about 1.5 years ago, told me how he thinks I should do it. And now we're enjoying the benefit together with our team, cities, and hopefully countries in the future.
Perfect, thank you, Oran. Omer, next question is for you. Do you feel the same as Oran? And what were your reasons to go public and why choosing the SPAC model in Nasdaq?
Yeah, so if following the SPAC in the US in the last 6 months, there was a lot of activity in the automotive space. Seems like many investors, institutionals became interested to play a role in investment in this field. Up until now, it was private. Raising a big amount of money for a company at this stage becomes a competitive advantage. Going into automotive, it means a long sales cycle. It's a long desert to cross. Innoviz is now planning to push the pedal in regards to increasing capacity, adding more production lines, and working on additional programs. So that looked as an attractive way to raise money, and also very helpful for the employees, obviously.
Thank you, Omer. Now, if we're talking about Nasdaq, so Oran, next question is for you. You went public on Tel Aviv Stock Exchange only a few months ago, but now we're hearing that you might be thinking about Nasdaq. Why not go there in the first place? And how did you decide that Tel Aviv Stock Exchange is the right place for you?
Okay, so first and foremost, we are an Israeli company. Most of the employees are Israelis. You know, the shareholders and the controlling parties are Israelis, and our clients start with were Israeli.
Sorry, we can't hear you, Oran. Okay, I'll continue. Omer, the next question is for you. So what is the best way to prepare for an IPO? We heard Danny talked about it. So what's the best way in the company level? And what are the best values you see in being a public company? How does this affect on the employees?
Yeah, sure. So there are many things you need to do before you become public. From government's point of view and financials, you need to work with the right accounting in order to be prepared for that. But also, it's a different mindset. You're no more a private company. You need to be prepared to report quarterly and understand how the market will evaluate you. You need to provide guidelines for the market because you're, as a young company without significant revenues, the guidelines and the KPIs are not just revenues, there are other things. And, for us, it required to start thinking a bit differently in regards to how we want to proceed. I mean, raising $350 million, which we are now, bring us to think a little bit differently on how we want to grow. I mean, this is, you need to start thinking about vertical acquisitions and possibly growth in different areas. These are things that you can't really think about when you're only working with VCs, etc. So you need to think about how to run faster and get a better market share and get revenues faster.
Yeah, Oren, what is your angle on that?
Actually, if I can elaborate,
yes,
it's very interesting because suddenly we are talking about building a company, not just pursuing exit, which is excellent to Israel. You know, from one hand, we have brilliant guys with brilliant ideas, and now we have the capital. So we have the funding, we have the companies, and actually we can fulfill Shimon Peres' dream to move forward, not just a startup nation, but scale-up nation. So now if we combine it, it will be perfect. So we will see more and more Israeli companies that are not just selling their ideas to others, but to establishing real companies and dominating the market. So it's not, we don't need to be shy. So it's great to see it, in three years ago, it was a bit weird to go to the stock exchange. But today, I think that if you can see Oran, he's an excellent guy doing excellent things and now thinking about moving to the Nasdaq. So I think it's only the beginning.
Yeah. Well, Oran, it's good to have you back with us. The question now is for Oran and Oren as well. You are both part of an infrastructure technology company. Do you think this sector is less popular compared to autonomous vehicle when looking at the stock market?
So
for you.
Yeah, sorry. So I apologize. I got disconnected somehow. Yes, I think that you see a lot of companies moving into the autonomous vehicle, or sensors, and Omer and Innoviz are doing an excellent job on that. We selected to go to the infrastructure side. We call it the autonomous city, and we saw that this space is quite occupied with incumbent players like the signal manufacturers and large infrastructure companies. And it's always challenging to sell to a city. Like, how do you sell to a city? How do you start selling to a city? It takes a long process. You need to know RFP, RFI. And we thought that this space is an interesting one for us. And once you win, you can win, 5-year contracts, 10-year contracts. And that's why we thought that this area is interesting. The second element, I think, for us is the ability to change the environment. Just having an autonomous vehicle ain't gonna cut it. In the world, there'll be connected vehicles. The vehicle needs to communicate with the city. They need to communicate with the signals. And we want to be the brain that enables those autonomous vehicles to enter a city, monitor, and improve the world in terms of reducing congestion, reducing pollution, and increasing safety.
It's really fascinating. Oren, do you want to add on that something?
No, it was brilliant. And I think that today you don't need to build only the software. You can understand that you have more time to build the company, and you need to aim high, like Innoviz. It's a not easy market. You need to penetrate OEMs, and with our technology that you need to build infrastructure, and also to create a paradigm shift toward a new technology. So it takes time. Now we have a funding to do it. We have time to do it, and we don't need to sell the technology. And I think that the market is more mature for companies like ours.
Yeah, perfect. Well, okay, we're a little bit short on time, so let's wrap it up. So let's finish with a session of tips, or maybe an advice for the CEOs that are watching us. Omer, do you want to go first?
Tips for companies who wants to go IPO?
Yeah.
Okay, so investors that we talked with that were looking to invest in Innoviz wanted to understand how you're going to grow the company. We are all used to working with VCs, and the funding is like slightly above what we need for the next year and a half. Start thinking very, very big. Start thinking about acquisitions. Start thinking about how you can run faster. How to become a very significant company. And that's the best tip. I mean, try to build a strong and very successful company, and it will become.
Perfect. Oren, something you want to add on that?
Yes, so maybe I think for us the most important thing was to build an Israeli company. To build a company that is comprised of people and the shareholders who are Israelis. We did ordinary shares throughout the rounds that we did. The founders are controlling the company, and today I'm very happy that I followed Oren's footsteps as the chairman and the CEO of the company, and still holding about 24% of the company, which makes us the decision makers. So I'd say to the founders, it's your company, it's your vision, raise the money and go public, but be the master of your own destiny through an IPO, whether it's in Israel, whether it's a SPAC. And it's really time for Israeli entrepreneurs to lead their companies and grow them and become bigger companies, and not always think about the exit, or not always think about the short term. Build long-term companies.
Perfect.
So I will take it to a bit differently. We need to understand that at the end of the day, you have a public company. It means that everything is public. So don't even be surprised that you will go with, outside with your dog, and the neighbor will stop you and say, hey, what is happening with the stock, and what is going on with the project in Germany, and why not, why you don't have any strategy to penetrate China? So be calm, you know, it's a public company. Everyone will ask you about the company, and they will give you some tips, and you will find yourself having a board of director everywhere, even if, you know, if you surf at sea and if it's outside your house. So be aware that at the end of the day, you have a public company, and enjoy it because it's very, very interesting.
Yeah, full transparency. Well, yeah, keep that in mind, guys.
Yeah.
Okay, so thank you so much. It was a pleasure. We definitely learned a lot today. We hope to see much more automotive startups go public in 2021. We will share the recording at the end of the event with everybody. I want to remind you that we are soon going to launch our investors event, so stay tuned on our newsletter. So thank you very much. Stay safe and have a wonderful week. It was a pleasure. Bye-bye.
Thank you. Bye-bye.